In this video, we're going to speak about the top 5 mistakes that I always see small business owners making when it comes to their finances. The first one is mixing personal expenditure and business expenditure. I know when you first start a company, it's super easy to do. Sometimes you're out at a restaurant or at the movies and you don't have your personal card, and so you just pay with your business card. And once in a while, look, it's fine. But what that does is it creates a director's loan account on your balance sheet. What that means is the company is expecting you to pay that back. So at the end of the tax year, either you need to pay back all of the amounts that you have paid through your business card that's actually personal, or we have to declare that as a dividends. If we declare that as a dividends, there's obviously a tax liability associated with it. And quite a lot of people can get caught out on this because they're taking their monthly or quarterly dividends out normally, and then they also have £50 there, £100 there, £200 there, and it adds another couple of £1,000s to their dividends amounts, which then creates this tax liability. So one easy way to do this is business card is only for business expenditure. If you do accidentally pay with your business card for personal expense, then that day or the next day you just pay back the exact amount and it will net off in the accounts, and then you don't have to worry about a future tax liability. Another mistake I see small business owners make is overlooking tax deadlines. So in the UK, you have 3, maybe 4 big deadlines that you need to focus on for your company. The first one is your confirmation statement, which is all about your business information, and that needs to be filed once per year, usually around when you originally signed up the company. The second one is your corporation tax return and your statutory accounts, which for small businesses are usually due at the same time, and these are due once a year as well, again usually aligned with the month that you incorporated the company. The third deadline to think about is the VAT. If you're VAT registered, that's every quarter, 1 month and 7 days after the quarter end. So you'll start to get into a flow once you've done your first year. And then finally, every 22nd of the month, you'll have your PAYE responsibilities from the previous month. So making sure you have these down in your calendar, you're super aware of what they are, and you're aware of the moment that you can start working on them is super important. For example, your corporation tax return and statutory accounts, you have 9 months and 1 day to complete. So there's a lot of time. Whereas for your confirmation statement, you have a 2-week window in which you need to complete these. So then it's more vital that you know exactly when that 2-week window is and you get in and you do it. Another mistake I see small business owners make is not pricing their services or their products appropriately. So I've had quite a few examples where clients will come to me and they're asking for help with cash flow because they can't pay the bills at the end of the month. And there are things we can do for cash flow to help with the way that the money is moving through the company. But at the end of the day, if you're consistently spending more than you're taking in, there's no cash flow method in the world which will help you cover your bills every single month. So then the real focus is increasing your income as much as possible, which usually looks like re-looking at your pricing structure. I think especially as new business owners, it can be difficult to increase your prices. It's very highly linked with your confidence and with what you think your value is worth. So then I think it's important to, 1, really nail your service offering so you feel like it's super valuable and worth the money. And then also try and price yourself higher and see what happens. And I'm sure 9 times out of 10, people will say yes to a higher number than you expect. So the fourth mistake I see small business owners make is not preparing for their taxes. And this one's a big one. So as I mentioned earlier, you can have a 9-month window sometimes to file and pay for your corporation tax, which is great, but it also means that sometimes you can just spend the money that you needed to save during that time. What I've seen happen is clients will come to me at last minute with all their information. I prepare the accounts, we tell them their tax bill, and they don't have that cash in the business. And either they have to pay personally or they have to call HMRC and try and figure out a way to make a payment plan, which is not ideal. So it's super important throughout the year as you're going to put money aside to cover these tax bills and to have a real clear image of what that's going to look like. 1, you're going to get peace of mind, but 2, it's probably also going to actually save you time and money because you don't pay any interest or don't have to do with these late payment plans. So finally, the final mistake that I see a lot of business owners make is not having a cash flow system. A lot of them come to me and they are paying for things ad hoc. They're paying for things based off of how much money they have in the bank account. There's no system, there's no process. So having a clear monthly or bi-weekly payment run, having a clear, even if it's just 3-month view of what the cash is going to look like coming in, will help you have those important conversations with suppliers, make sure you're paying everyone on time, and make sure it's not taking up hours of your month every single month because you're logging into your bank just to pay one payment instead of setting up a system where you can pay half of your monthly payments all in one go.